China can't afford a war. It would lose against the USA. According to the most recent data from the Institute of International Finance, IF, China saw portfolio outflows totaling $17.5 billion, an all-time record, Hongkong Post reported. Experts believe China's economy is in serious trouble because it slowed down significantly in March. Consumption fell for the first time in more than a year, and unemployment rose to a record level in 31 major cities. Given Beijing's apparent determination to uphold its zero-COVID policy despite the high cost, some economists are even speculating about the prospect of a recession this quarter. Concerns over the geopolitical dangers of investing in China, general economic instability, and the withering of China's market yield edge over U.S. bonds are among the factors that could cause investors to sell, the paper claims. Foreign investors withdrew more than $7 billion from onshore Chinese equities in March through the Hong Kong market. With all this in mind, in today's video, we will look into China's economy and find out what went wrong and why can't China afford a war. Although the world is mostly unaware of it, China is experiencing another financial catastrophe. Their bank accounts have been suspended for 4 rural lenders for months. The average annual income is only about $11,000, and about 200 million people live in poverty. For this reason, when economic growth slowed slightly in the early 2000s, the government began urging people to buy homes. They decided to do this to maintain the expansion. Following the CCP's relaxation of lending restrictions, banks began making loans to individuals and businesses. This contributed to the real estate sector in China expanding and gradually growing to become a larger and larger portion of the Chinese economy. The only problem was that China's economy now faces a ticking time bomb due to this real estate industry. The CCP attempted to reel the real estate market when it grew to an unmanageable size after realizing that this couldn't continue indefinitely. To keep the level of leverage in the sector under control, the CCP developed the so-called 3 red line policy. It became more difficult for businesses like Evergreen to work on some of the buildings they had previously sold to buyers. It is understandable why the real estate market is on the verge of collapse when these 2 factors are combined with the CCP's strict zero-COVID policy. More than 75% of household wealth and 30% of China's GDP were derived from the real estate market. Many families who pool their multi-generational wealth to purchase real estate are suffering due to the country's meltdown. All of these factors together have contributed to China's uneven economic growth. The GDP only increased by 1% in the most recent quarter. Additionally, the CCP is anticipated to fall short of the 5.5% GDP growth target for the first time in 30 years. The global economy will be affected by this downturn in China. The next 10 years are so awful that analysts are dubbing them the decade of lost returns. According to experts, it will usher in a time of such intense volatility that traditional techniques won't hold up. Recall the agreement the CCP made with its people. In exchange for the citizens' acceptance of the CCP's authoritarian rule, the CCP was expected to deliver constant economic growth at all costs. When your pay rises each year, and your real estate investment keeps rising, it is much simpler for the government to overlook certain things. The current state of affairs, however, makes it seem as though this trade-off is not worthwhile since economic progress slows while the authoritarianism of the government only seems to be escalating. Because of Xi Jinping's zero-COVID policy, which has produced dystopian nightmares like this one, the CCP recently devised a cutting-edge tracking device to track nationals abroad. The nation as a whole has a COVID policy of 0 overall. To prevent tenants from leaving their apartments, there are gates, PCR tests, and ongoing lockdowns everywhere. Only padlocks and bicycle locks keep people inside. Some people will have electronic, magnetic alarms installed on their front doors in locations where they tested positive. Additionally, the Communist Party is increasingly attempting to regulate how Chinese children spend their spare time. The majority of you are undoubtedly already aware that China is the country with the second highest military spending. The CCP spends even more on internal security than it does on its military, which may come as a shock to some. Even while this has been the case for a long time, even before the zero-COVID policy. We can't even begin to comprehend how much extra the CCP is paying to keep its people under control. The only issue right now is that people are objecting to this government overreach, particularly with regard to some zero-COVID strategies. The CCP has isolated elderly people from their parents and imprisoned people in apartments for weeks, and even exterminated pets in order to meet Xi Jinping's utopian aim of zero-COVID. Because of how terrible things have gotten, Xi supporters are raising questions about loosening the zero-COVID policy. This is a contributing factor to the CCP's hostile rhetoric toward Taiwan. It wishes to exploit it as a means of escape from its numerous internal issues. However, threatening war and starting one are two quite different things, and the results for the latter are very risky. The CCP has undoubtedly been closely following Russia's war on Ukraine. Everyone was greatly surprised by how swiftly and severely the world reacted in terms of sanctions when Russia launched its invasion, but especially the companies left overnight. The U.S. blocked Russian banks' access to the SWIFT network, and Russia's foreign exchange reserves were frozen. Russia's economy was only saved by its access to oil. Although China's economy is much larger than Russia's, it is also extremely tied to the rest of the globe, particularly Western nations. China's exports account for about 1/5 of its GDP. The U.S. is China's largest trading partner, accounting for more than $500 billion, or approximately 17% of all exports. But its dependence on the U.S. doesn't end there. 9 of China's top 10 export partners are allies of the United States. China sends more than 50% of its goods to nations that are likely to bypass the U.S. Nevertheless, some of you may argue that China relies on the United States and its allies. Trade is a two-way street. Therefore, just as much as the USA depends on China for imports, so does China depend on the USA for purchases of American commodities. However, this is where things start to get a little tricky, so let's attempt to make it a little clearer. We need to comprehend why the US and the majority of the rest of the globe prefer to purchase goods from China rather than other nations like Vietnam or India. China has been the cheapest country to produce goods for most of the 21st century. It's not as if China is the only nation selling these goods, and that means we have to rely on the CCP to supply us with affordable technology. These are the cheapest options. Therefore, we're buying them. If China were to halt manufacturing for any reason, a lot of other nations, such as India and Vietnam, would be happy to take over. The largest ones are here, which include tablets and iPhones. In fact, Apple has already begun to diversify its supply chain by moving some of its operations out of China to more hospitable nations like India. Additionally, this will continue to expand and is not limited to Apple. This is not to say that China wouldn't use exports as a weapon if it were subject to sanctions. In fact, given that it has no other significant power, it is highly likely that it would. However, producing inexpensive goods is easily replaceable. Businesses and residents may experience short-term inconveniences, but everyone will quickly locate a new manufacturing location. China, however, has written a great deal more about this commerce. These exports generate more than $500 billion in income for Chinese businesses. But the real issues started with employment. As with all data coming from China, it should always be regarded with skepticism because the CCP is known for embellishing the truth. As a result, China has around 120 million manufacturing employees. And about 20% of the products that China produces are exported to the United States. Let's therefore estimate that 20% of the jobs would be impacted if this trade were to be stopped. That amounts to 24 million people who could lose their jobs. Additionally, no event stands alone when it comes to the real economy. There are usually significant consequences. We must remember that one man's earnings are another man's expense. As a result, if more than 20 million individuals cease spending because they lack employment, other people's income will decrease, and the economy will suffer greatly. Currently, all of this only takes U.S. sanctions into account. The ramifications on China's economy might be disastrous if that were to ever happen because some European countries may join these sanctions and quite perhaps some major Asian countries. Furthermore, this will simply make China's wealth inequality issue worse. Many individuals complain that capitalism is to blame for wealth inequality, and wealth would be dispersed evenly under a communist system. Based on data released by the CCP, China isn't much better regarding the gap between the rich and the poor. Therefore, things might not be as bad as they seem. In addition to the recent real estate slump in China hitting middle-class households the hardest, the COVID closure has only worsened these issues. Therefore, if there is ever a slowdown in the economy brought on by sanctions, middle-class Chinese citizens would be the greatest threat to the CCP's authoritarian leadership, and hundreds of billions of dollars spent on internal security may not be sufficient. Starting a war is obviously not the answer, despite the fact that yelling war may divert the population. Economically, China cannot afford a war, yet authoritarian regimes have started conflicts in the past despite this fact. That is an issue when one individual is in charge of making decisions for the entire country. What are your thoughts on this? The content in this video is for educational purposes only and hence should not be considered financial advice. So do let us know which topic we should cover next. If you enjoyed the content, give us a like. And thank you for subscribing to our channel. See you at the next one. Bye.